The global trade landscape shifted dramatically on April 10, 2025, as China imposed a sweeping 34% tariff on all imports from the United States. This move was not just a simple policy change, but a bold statement in the ongoing economic rivalry. This unprecedented move marked a significant escalation in the ongoing trade war between the world's two largest economies. The stakes have never been higher, and the ripple effects are being felt across the globe. The tariff, which will impact billions of dollars worth of goods, is a direct response to the Trump administration's earlier decision to impose a 34% tariff on Chinese imports. This tit-for-tat strategy has become a hallmark of the current trade tensions. This tit-for-tat exchange has sent shockwaves through international markets and cast a long shadow over the future of US-China relations. Investors are on edge, and stock markets around the world are experiencing unprecedented volatility. The immediate impact of the tariffs is likely to be felt by consumers and businesses on both sides of the Pacific. Supply chains are being disrupted, and companies are scrambling to find alternative sources and markets. American consumers can expect to see price hikes on a wide range of goods, from electronics and clothing to automobiles and machinery. The cost of everyday items is set to rise, putting additional strain on household budgets. Chinese businesses that rely on American components or sell their products in the US market are also bracing for significant disruptions. Factories may face slowdowns, and workers could see reduced hours or even layoffs. The tariffs are a stark reminder of the interconnectedness of the global economy and the potential for trade disputes to have far-reaching consequences. As the world watches, the hope is for a resolution that will stabilize the markets and restore confidence in international trade. The roots of the current trade war can be traced back to the Trump administration's decision to impose a 10% tariff on Chinese goods in February 2025, followed by an additional 10% in March. These tariffs marked the beginning of a significant escalation in economic tensions between the two superpowers. These initial tariffs were ostensibly aimed at addressing the growing trade deficit between the US and China. The trade deficit had been a long-standing issue, with the US importing far more from China than it exported. However, they were also linked to the Trump administration's allegations that China was not doing enough to stem the flow of fentanyl, a powerful synthetic opioid, into the United States. This connection between trade policy and drug enforcement added a complex layer to the already fraught relationship. The fentanyl crisis has ravaged communities across America, claiming tens of thousands of lives each year. Families have been torn apart, and entire neighborhoods have been devastated by the epidemic. The Trump administration has repeatedly accused China of being the primary source of fentanyl and its precursors, chemicals used in its production. These accusations have been a major point of contention in US-China relations. While China has taken some steps to crack down on fentanyl production, the Trump administration has argued that these efforts are insufficient. The US has called for more stringent measures and greater cooperation from Chinese authorities. The imposition of tariffs on Chinese goods was seen by many as a way to pressure Beijing into taking more aggressive action against fentanyl trafficking. This strategy was controversial, with critics arguing that it conflated trade issues with public health concerns, but it underscored the urgency of addressing the fentanyl crisis. China's response to the initial US tariffs was swift and multifaceted. In addition to the 34% tariff on US imports, Beijing announced a series of retaliatory measures designed to inflict economic pain on the United States. These measures included increased export controls on rare earth minerals, crucial components in many high-tech products, including smartphones, electric vehicles, and military equipment. China also filed a lawsuit with the World Trade Organization, challenging the legality of the US tariffs. The WTO, which governs international trade rules, will now have to adjudicate the dispute, a process that could take years to resolve. Furthermore, China suspended imports of sorghum, poultry, and bone meal from 6 US companies, dealing a blow to American farmers already reeling from the effects of the trade war. The Trump administration's response to China's retaliatory measures has been defiant. In a series of posts on his social media platform, Truth Social, President Trump accused China of panicking and playing it wrong. He insisted that the tariffs were justified and that China was feeling the pressure of his administration's tough stance on trade. Despite the escalating tensions, President Trump expressed a willingness to continue negotiating with China. He extended the deadline for TikTok, the popular social media app owned by a Chinese company, to divest from its Chinese parent company by 75 days. However, he also maintained that the tariffs were reciprocal and that China was ultimately responsible for the trade war. The escalating trade war between the US and China has alarmed economists and trade experts who warn of the potential for a protracted and damaging conflict. Many believe that China's decision to impose a 34% tariff on all US imports signals a hardening of its stance and a diminished likelihood of a near-term trade deal. Gabriel Wildau, a senior analyst at Teneo, a political risk consultancy, noted that China's response was significantly stronger than its reaction to previous US tariffs. He suggested that this reflected a growing frustration within the Chinese leadership with the Trump administration's tactics, and a belief that Beijing had little to lose by retaliating in kind. Section 6. Global Markets Reel. The trade war between the United States and China has sent shockwaves through global markets as investors grapple with the uncertainty and potential economic fallout. The Dow Jones Industrial Average, a key barometer of US stock market performance, plunged on Friday, April 4, 2025. Following China's announcement of its retaliatory tariffs. Other major stock markets around the world also experienced significant declines, reflecting the global nature of the trade war's impact. The escalating tensions between the US and China have fueled fears of a broader economic slowdown, as businesses and consumers alike become more cautious about spending and investment. Section 7. A history of trade tensions. The current trade war is not the first time that the United States and China have clashed over trade. In recent years, the two countries have been embroiled in a series of disputes over issues such as intellectual property theft, currency manipulation, and market access. The Trump administration's decision to impose tariffs on Chinese goods represents a significant escalation of these tensions. In February 2025, China imposed tariffs on US coal, liquefied natural gas, crude oil, agricultural machinery, and large engine cars. These were followed in March by tariffs on US farm products. These earlier tariffs were seen as more restrained than the current round of tariffs, leaving some room for negotiation. However, the Trump administration's decision to impose a 34% tariff on all Chinese goods has significantly raised the stakes. Section 8. The Perils of Protectionism. The escalating trade war between the United States and China highlights the dangers of protectionism, a policy of shielding domestic industries from foreign competition through tariffs, quotas, and other trade barriers. While proponents of protectionism argue that it is necessary to protect jobs and industries from unfair foreign competition, economists warn that it often leads to higher prices for consumers, reduced economic growth, and retaliation from trading partners. The current trade war is a case in point. The tariffs imposed by both the United States and China are likely to harm businesses and consumers in both countries, while doing little to address the underlying trade imbalances that are at the root of the dispute. Moreover, the tariffs have fueled tensions between the two countries, making it more difficult to find a negotiated solution. Section 9. Seeking a Thaw in the Trade War. The escalating trade war between the United States and China is a lose-lose proposition for both countries and for the global economy. The tariffs and counter-tariffs have led to increased costs for businesses and consumers alike, disrupting supply chains and creating uncertainty in the market. Finding a way to de-escalate tensions and return to the negotiating table is essential. Both nations need to recognize the mutual benefits of cooperation and the long-term damage that continued conflict could cause. However, this will require both sides to show restraint and a willingness to compromise. Trust-building measures and open communication channels are crucial to making any progress. One potential pathway to de-escalation would be for the United States to lift its tariffs on Chinese goods in exchange for China addressing US concerns about intellectual property theft and forced technology transfer. This could pave the way for more balanced trade relations. Another option would be for the two countries to agree to a phased reduction of tariffs, coupled with a commitment to address their trade differences through negotiations. This phased approach could help build trust incrementally. Whatever path is chosen, it is clear that the current trade war is unsustainable and that a solution must be found. The stakes are high, and the world is watching closely to see how these two economic giants will navigate this complex issue.